Hello, Facebook. This is R.McTyre, and you're watching the 5-9 podcast. Thanks for joining me. I always like to bring the business to the show. So, right there on the lower left hand is my Cash App if you guys desire to donate to the organization. If not, enjoy the show. We appreciate it. So, let's get right into it. Um, so, per what I said, the last episode, if I spoke on, everything going on in LA. I gave it 24 hours. I gave you guys 24 hours to check it out. I appreciate you checking it out. It will not be available in any type of other social media. It is gone. Um, like I said, you can email me, and if we vibe, I might send it to you, or if not, hey, so what? Let's keep them pushing. Um, so moving on. Today we're going to talk about um, my favorite subject, finances, particularly the stock market. Um, so I'm going to say this. First thing, if you're going to step one to any type of investing, and this is something that I heard, not too long ago, is never build your skyscraper on wet sand. And by that I mean you have to get your financial house in order before you start investing. Before you have, before I feel that, in my opinion, and by the way, I'm not a guru. I'm not a person certified. So if you invest and you lose money, which you can, um, you know, I, I'm not responsible. Okay. Um, but to what I'm saying, um, before you invest, you should have your savings built up. Um, you know, Preferably your emergency savings, your credit card in check. You know, um, so because you're building a foundation. Because what's going to happen is if you decide you're going to play the market and you're going to buy a whole bunch of stocks, right? And you don't account for an emergency, you're going to start selling your stocks because you're going to need that money back. So it's going to defeat the whole purpose of you investing. So that's why I say you don't want to build your skyscraper on wet sand. Okay. So assuming that you guys have done that, um, the reason you should invest is because if you have $50,000 in the bank, right? The reason you want to invest and put it to work on the stock market is because what you want to buy are assets that create. Um, you want to buy asset. You want to buy assets that generate income. In the stock market, you have to do your homework, but there are certain stocks you can buy when after over time they appreciate. So I'll give an example. Berkshire Hathaway is now, I believe it's at $90,000 a share right now. Netflix is at $1,200 a share right now. So back in the day when those stocks were, presumably what, $30, $100, and you had bought 1,000 shares of that, do the math. So what you want to do is, like I said, that's getting your money to work for you. But but also you can also get into a situation where you can buy stock and it won't do anything for you. Excuse me. So um, in the stock market, it's kind of like the tide. The tide comes in, tide goes out. Ooh. Um, so the tide goes in, the tide goes out, and what you want to do is try to get in. They say the best time to invest it was yesterday. Second best time is today. Um, you could do those through a number of apps. There's Schwab, which I started. There's Robinhood, and actually, I I gotta kind of find where you prefer. There's different ones. There's E Trade, there's Vanguard, but for me, I use Robinhood. Um, so basically, so you create your Robinhood account, and then you transfer money into the account, and that's how you can buy stocks. So um, so yeah, so basically, like the goal would be like every time, you come into some money or get paid or whatever, you should be investing a portion of your check into the stock market. Um, and it's not, like it's such a broad thing to say, to invest in the stock market. But um, basically, I'm going to get into my portfolio in a second, but you know, not all stocks are created equal. Some stocks are dividend paying, stocks where they pay, the company pays you to hold on to the stock because basically what when you're getting into stocks, you're buying a share of a company, right? Okay. And then there are ETFs, electronic traded funds, where they're if a stock represents a piece of a company, the ETFs represent more like if you go into the supermarket and there's an aisle of food, these are different assorted stocks. So that way, these are considered safer investments because typical um, certain stocks can go up and down. Um, so you know, um, so you have to kind of find out where you fit in. My personally, my thing is never invest in a company that you don't know or a company you have no interest in. Personally, my interest is in technology, um, with a little sprinkling of health and um, kind of known companies, known entities. Um, you shouldn't have. They say your portfolio should have no more than 40 positions. That means that's 40 individual stocks, because it's not just buying one share. Over time, you want to keep adding to these shares. So if I buy one share in Pepsi, right, that's great. Um, Over time, you want to keep adding to that because um, they, you know, they over time, uh, the cost of the stock it grows. Now, how does that relate to the whole point of this? Is that what you want to do is like there are people who get into the stock market who are short-term investors. They get in, so they basically say they're day traders, which I don't recommend because it could either go up or go down. It's kind of like gambling. Um, Day traders are pretty much like you see a stock for $200. You put your $200 in, and if that $200 goes up to like 250, then okay, then you pull your money back out and you made 250, right? Um, then there's the long holds who buy certain stocks and hold on to them and let them appreciate in value, right? And with the stock market, I would is sort of a do-it-yourself form of retirement outside of regular Roth and IRAs and that sort of thing and Social Security. Um, because over time, and I wish I knew this, sooner. In my 20s, if I had started investing and getting into like things like Bitcoin and stuff like when I first heard about them, it would have been, Bitcoin is now trading at like $90,000 per Bitcoin. Um, I'm just, you don't know what you don't know. But again, uh, hindsight is what it is. But um, so basically, like I say, your portfolio shouldn't be no more than 40 positions. It could be more, you know, but the point is like the performance of your portfolio is dictated to like everything in there, not just the individual, but it's the whole portfolio. Um, Now, how much I have invested right now, I have close to almost 5 grand, 5 racks invested in the market right now. And what I've seen is that, um, the investments have grown. Like I've bought, like, there are certain ones um, that I'll go through briefly that, like certain stocks that are, for me, since I've been investing since February, there are certain ones that have been really performing. I'm just going to give you my experience of what I've seen. Um, the first one I bought was Celsius, which was at 30 something dollars. But it's been going up to like 42, which is a really good one. I drink a lot of Celsius. Um, you know, Cutting down, but one I want to put in your ear is NVIDIA. The reason I put in NVIDIA is because all the AI tech coming out um, has NVIDIA. semiconductor chips in there. It's, NVIDIA is a growth stock. It's been knocked down, but it's the one. If I'm going to put, if there's one takeaway, is you guys need to get you some NVIDIA right now. Amazon is one of those OGs that everybody's heard of. Amazon. They're looking to get into the AI space, so Amazon is that one. Um, the OG is Microsoft. Like, I even go hold you up. Microsoft has never really ever done me dirty. Like Microsoft stays solid. Like the fundamentals of Microsoft is crazy. Like between everybody computer on earth has Microsoft software, and of course the Xbox gaming systems and everything. But Microsoft, is doubled down in AI, and they are solid. Another one, Google. I mean, everybody uses Google. Um, Google has a huge, market cap. Google is another high performer that, they've been kind of behind Amazon, but Google's Google. They always, bounce back. Another one, which was, when I first started, there are certain, critical ones that I really had to get early, and I kind of like starting out. I was like, okay, I gotta get this up. Was Metaverse, which is owned by Facebook. Um, I got it at what? Well, I paid probably a little. It was high. I ain't gonna hold you up. I only got one share of Meta, but it was like 530 or something like that when I got it. But I have since, within a couple of months, saw it go up to like $700 a share. Um, that's only because, like I say, the AI components and um, they advertise all across social media. So it has like their budget is like I forget like 5 trillion or something like that. It's crazy. But the market fundamentals are pretty solid. Um, Another one, Micron. Micron, the the ticker side is MU. Micron has been really good, surprisingly. Like Micron has been really good because like it's the a lot it's the semiconductors. It's basically remember the California gold rush where people were going to get the gold, but the person who made the money were the people who were selling the shovels. Micron is basically all their chips are going into all this new AI tech and the servers and stuff like that. So Micron has been solid. I ain't gonna hold you up. Another one, Palantir. Palantir's they develop like chips for like defense. They have contracts with Pentagon and contracts with other world governments, but a lot of the tech is going through Palantir Tech. Um, I'm gonna go back. I'm gonna circle back around the Tesla and Uber in a second, but let me continue. Another one that seems to be uh, really surprising me. I want to make sure I say this one correctly. It's called um, the ticker is AVAV. It's called AeroVironment, and this is a silent assassin. Like this one, um, they have government contracts, and they've been working on drone techs for the military, like next level stuff, and um, they have been, they're like, I got them fairly cheap, but they're going up. The stock has been going up to like 200. It's been solid, So I'm like, yeah. So um, another one has been ANET, which is again that's another internet company. It's going to be really big with the servers and that sort of thing. So I definitely um, would recommend that. Pepsi has been really good. Coca-Cola has been. You would think Coca-Cola, as long as it's been around, would be like an OG, but Coca-Cola is really bad. They don't pay a really good. Well, they don't really pay a really good dividend. Pepsi is a little pricey at 130 a share, but they pay a dividend. But if you think about it, Pepsi is more than just the drink. They spin off into other different things, and they actually own a piece of Celsius. But Pepsi has it has this, they have their fingers in a lot of different companies, and actually Pepsi, quite frankly, has been undervalued. Um, so so Pepsi is a really good one. Um, another one, um, Becton Dixon. Becton Dixon is a company. If during the pandemic, they were the biggest. They're a medical supply company, and they're the biggest suppliers of syringes. So during COVID, they made a majority of the syringes, and of course, their stock, healthcare is, really they're actually undervalued. It's selling at 174 a share, but at its height it was like 254, and it's kind of slowly climbing back up to that spot. Um, so I invest kind of, I kind of, encourage you guys to get in. But a new kid on the block has been CoreWeave, and CoreWeave, um, again with AI tech coming on, CoreWeave is a company that rents out their server space, so that way companies looking to get in to AI don't have to invest in all this other um, infrastructure. They're like ready made. They're there to be a vendor for companies that want to invest in AI space. So CoreWeave is actually uh, trading at 141. Like I said, right now, a lot of, um, there's a lot of growth. It's been, on an upward trajectory. But CoreWeave, um, the ticker sign is CRWV, has been really, really, really good. And I got 2 shares of that. Um, another one. Um, so on the ETF side, um, I I had uh, forgive me, this is kind of like I'm going to assume that people know a little bit about certain ETFs, but so forgive me if I'm doing a little flyover. But there's an ETF I sold called SCHD because pretty much in that ETF I already had certain stocks that was already in that, and and I also advise you guys to stay away from Apple. I know Apple sounds like a good stock, but Apple's performance has been atrocious. They have no idea what they're doing with AI. Um, they're they're not innovating. Um, so Apple, I mean, Steve Jobs would be rolling in his grave if he knew that what Apple was doing right now. Stay away from Apple, okay? Apple used to be an OG, and people would buy tons of Apple, and Apple used to be that one. Not anymore. Um, but back, um, um, so I'm invested in SIBR, which is cyber. So those are it's a cybersecurity stock, and cybersecurity has been really, really important. I'm also invested in an ETF called INDA, which gives me exposure to the stock market in India. So that's why, like I say, it's been pretty solid. And another one is SMH, which is a semiconductor ETF, uh, which has it's called it's a semiconductor ETF, and within that ETF, there's 10 different holdings with NVIDIA, Taiwan, Broadcom, ASML. So that way, if you don't want to buy all, the individual stocks, you can just go ahead and buy the ETF if that's what you're into. Um, so, you know, so those are the high performers. Now back to Tesla and Uber. I originally got into Tesla because a couple things. I really like what they were doing with SpaceX and that sort of thing. Um, and before the whole controversy with the CEO, um, I really like what I mean, say what you want, but I wouldn't bet against Musk. Okay, people, they they deliver. You know, they got into they got into space. They got the whole thing was having a rocket that could be reusable, and they did that. The electric car. They have the biggest share of all the car companies right now. Um, Tesla's trading at 300 some dollars, and Ford and GM. If you look at their shares, it's like there's not even a competition. They're the best. car manufacturer in America right now. Um, and so they've been, I think, in this month they're going to be doing driverless full FSD, which is full self-driving vehicles. These vehicles don't have steering wheels. Um, it's basically uh, you get in, you order the thing, you order the vehicle, or you can buy the vehicle and have it work for you. And then they're also going to start having where the vehicle will drive itself from the factory to your doorstep. Um, and so they're using various AI. And basically, every Tesla on the road, they've been getting data from every Tesla on the road. So that's how they're able to create the infrastructure for having these vehicles. So every instance, every interaction, every traffic pattern has went back to Tesla. They've crunched the numbers, and that's sort of how the robo taxi is supposed to work, right? Full self driving. Um, you know, Waymo, which is already operating in California. The vehicle, the problem with Waymo, where Tesla, so the Tesla full self driving vehicles can sell for like 30,000, right? The Waymo, um, as it is a $200,000 vehicle because it uses different types of radar and that sort of thing. It's effective, it works, but it's not scalable. Um, and then Uber, Uber is another one not to sleep on because I think even with full self driving, people are going to still want to use Uber because they might not be comfortable with full self driving. So I'm invested in Uber, and I think Uber is way better stock than Lyft. Um, so, but I would say, yeah, Tesla. If Tesla is a very volatile stock. Like it would go up, it would go down. Elon Musk, recently had a thing with Donald Trump where he said wouldn't have won the election without him, and then Trump's threatened to cancel all his contracts, and then the stock went down, and so Tesla is a very up and down. There's never it's not stable. It's not as stable as Microsoft. Microsoft at least you know what you're getting. With Tesla, it's all over the freaking place. It could be up, down, left, right, you know. But I wouldn't bet against, you know, um, Tesla. So I figure, it wouldn't hurt to own, at least one share or have some exposure to Tesla. But um, Tesla is one of my, is very interesting to me. So I'm gonna wrap this up. So uh, I got 38 positions. I'm probably, I want to add, you know, um, I want to make it 40, so I'm going to add the last three, um, and sort of on my hit list, what should I call that I'm looking at. You know, a good one is um, probably um, Exxon. Exxon is one I'm thinking about because they do the police body cams, and they're the only company doing that, like, full body cam. So AXON, it's trading at $775. It's really kind of high, but Exxon is definitely a good growth one. Um, I keep looking at Netflix. I really want Netflix, and I should have got Netflix, quite frankly, when it was like when it went down to 900. Now it's going at 1200. Um, but Netflix, I believe they pay a dividend. Another one is Costco. Costco is a very good one because Costco has a membership where they're, Costco-based membership. Anybody knows, Costco is never going to go away. They got, they're always going to make money. But Costco has been trading at $1,000, which is very tempting. But again, um, so definitely it's something to definitely consider. Um, so you guys, so I'm gonna check out. Let's see if you guys had any questions. Is there any comments? Okay, let's see what you got here. Comments. Chaz, what's up? Let's see, Chaz. Google AI Gemini works better than Chat GPT. If they figure out how to market, I believe they will skyrocket. Google AI Gemini. Okay, I gotta check that out. You see, I'm so primitive. I only buy and whole VOO and SPY ETFs. You're not primitive. I want VOO. Um, it's VOO. I mean that it is pricey. I could have gotten VOO. And QQQ is a really good one. Um, I still might get those, man. Spy. Those are really good ones. Musk is too volatile. The thing about Musk, like he might, be pushed out of the company. If he keeps playing with the money like he's doing. If he keeps it up, he's gonna get voted out of the company, and they're gonna get somebody in there that's gonna, But you know, so either way, you know, Tesla's gonna be straight one way or the other. Um, but I think they're giving Elon, a chance to get it together. Um, I wouldn't bet against Elon, but Elon doing the most. He's doing the most. His board is too submissive. I agree. They are too submissive until they're not. Okay, so anybody can get it. So um, the second he loses him way too much money, he gonna be out the door. The Tesla stock, because the robo taxi rollout, if that flops, you know, I don't know, man. I just there's so much going for it, but here's the thing. I'm going to be really honest with this one here. Those robo taxis, the second that there's an accident and somebody dies, because these things are going to be unleashed on the public, and the second that these things, if they don't work and there's a safety problem and people die, and you can imagine all the lawsuits that will come with that, that could be it. So again, there's a lot of gambling. There's a lot of wait and see. You know, he's also going to have robots. Tesla has these robots that they're the Optimus robot. I don't exactly, understand like why would I need to own a robot? You know what I'm saying? I'm just like that's not a need. You know what I'm saying? I guess the idea is it's going to replace workers. Um, but I just we'll see. Because that seems what Tesla seems to be, is trying to do is trying to figure out a way to replace the worker either through AI or robots or robo taxis, and they're trying to put people out of work. Um, so I mean, for investors, I mean, that's good, but for the common person, I don't know. There's a lot of bigger questions, and it creates jobs, where in a sense that there's just going to need to be somebody to keep these mechanisms working, but I don't know. But again, back to, if these full self-driving vehicles can either, oh, Starlink is as great as absolutely. Um, but if these full self-driving vehicles don't work, that's going to be a big problem for the company. So I'm taking a huge risk on that. So I don't know. It's gonna, we'll see what happens. So yeah. So thanks for checking out and rocking with me. You keep rocking with me, rocking with you. I appreciate y'all. I think you guys are amazing. I'll catch you on the other side. Take care. Peace.